welcome back. You're watching Business Morning on Channels Television. And so while Nigerians continue to digest the news that refineries are going to be back on stream, the Port Harcourt refineries and, of course, the Warri refinery will be beginning production in the next couple of weeks. It might also allay the fears of what the World Bank is predicting with regards to Nigeria's economy facing a series of tough challenges because of fluctuating oil prices. And so that's where we're going to kick off this next segment. We're talking about fluctuating oil prices and the possibility of Nigeria being delisted from JP Morgan's government bond index emerging market, what you call the GBIEM. And this has made some market watchers feel that the Nigerian market is a risk waiting to crystallize. Ike Chioke, Managing Director, AfriInvest, joins me now to talk about this. Good morning, and thank you so much for joining me on the program, Ike.
Good morning.
Now, is Nigeria really a risk, or the Nigerian financial markets really a risk waiting to crystallize?
Thank you, Fred. I think what you see is investors, particularly foreign investors, sort of standing on the sidelines, doing the least possible. If you look at the data we have for FPI inflows into the country for the first quarter, we're down about $0.6 billion compared to the same time last year. So far this year, we've seen a total of only $1.8 billion come into the market compared to $2.7 billion for the same quarter in 2020. So clearly, there is a difference. I think what investors are probably saying with their feet is to say, we'll wait until the new government settles down, appoints their ministers, and then begins to give a direction as to what kind of economic policy they intend to pursue.
Now, that's on the one hand, but we're still talking about this risk. Is this risk a sector or industry specific kind of risk?
No, I won't say it's any sector or industry specific. I think it's just broadly defined for the market. And when we look at the market, we obviously are talking about investors both in the fixed income space as well as those coming into the equities. For equities, generally, they tend to look at the bellwether stocks, so the blue chips, and that cuts across many of the sectors in the market.
But talking about the fixed income market now, are you comfortable with the level it's at?
I think the level it's at is realistic, given all the macro issues the economy is facing. I think we'd expect to see that yields may decline if there's increased interest in Nigeria. But given issues from, you mentioned the JP Morgan index, they've decided to give us an additional extension up to the end of 2015 before deciding whether or not to exclude Nigeria from the index. Now, that's important because if they were to announce, say, in a month or tomorrow that they're going to exclude Nigeria, it would then mean quite a lot of foreign capital will have to leave the economy. And if that happens, then clearly that will have serious impact on not just the fixed income space, but also on the equities. So
what if, for instance, let's look at this scenario. If, for instance, the JP Morgan had gone ahead and delisted Nigeria from its GBIEM in June like it had wanted to in the first place at the beginning of the year, what would have happened? Would we have seen a bigger risk across the markets?
Absolutely, absolutely. Because quite a lot of foreign investors, work on what I call a check-the-box basis. If we're in a particular index, then it means that they're allowed to come in and invest in this market. If we drop out of the index, then they will simply just have to reorganize their portfolio and exit all the papers they have. So it would include quite a swath of all our treasury bills, and obviously some of the more liquid FGN bonds will be affected as a consequence.
So looking at the market the way it is, if, well, we're going towards the end of the year and hoping that by that time the market will be strong enough for JP Morgan to keep Nigeria on its list, but are the fundamentals strong at this time? Does it look like we're going to be able to maintain that spot on the GBIEM?
I think it does look like it is possible. I think in the short term, there's also all the anxiety about, is the central bank meeting the dollar demand in the market? Obviously, central bank is trying to manage it as efficiently as it can, given the decline in oil revenue. So you then see challenges with investors feeling perhaps there are constraints to them remitting profits from their investments in Nigeria. But I think all that becomes clearer once you have an understanding of what the economic blueprint for the country would be from the new government. And there's also discussion international after the president of the G7 last week. So depending on the kind of multilateral or bilateral support it gets from abroad, there could be a strengthened capacity for Nigeria to support its foreign exchange market. And once that signal is positive, then clearly, the JP Morgan index might be a good point, because there could be more influx of foreign currency coming into the country than there is the case presently.
Ike, you must remember that the economic factors are not determined only by domestic issues. We also have to play in global issues as well. And we know that oil prices have continued to fluctuate. As of this morning, selling at $63.72 a barrel. Now, that was one of the things that was highlighted by the World Bank that could give or show or present economic challenges for Nigeria going forward. And so the Central Bank of Nigeria, the fiscal and the monetary authorities are having to face issues domestically and internationally as well.
True, that is a fact. But we've already adjusted to that, as you realize. Our budget is below the current price anyway. So we are living with that reality. I think Nigeria has been recognized by the World Bank as one of the countries has actually been quite disciplined in its response to the oil price environment. Now, that is not to say that the problem stops there. I think that it's one thing to cut your cost according to your revenue profile, but it's another thing to then say, how do we pay for growth? There are a lot of things President Buhari needs to do, and it will need a deliberate, decided effort from his team to work out how the government will have to fund that growth. And because Nigeria fundamentally remains an attractive destination, once they articulate an interesting policy framework, we believe that foreign investors who have been waiting on the sidelines will start coming back into the market and will help them support the country's foreign exchange market.
But still, before they begin to come into the market, we're still talking about that risk. Do you think that there's any process or risk mitigations process in place that will, for instance, prevent a risk if it does happen?
You mean like, some of the risk mitigation measures might be to, to look at some derivative structures for the market, but I think that is a very complex decision for a country to look at directly. I think you can consider doing that on a certain portion of your foreign exchange profile, but not entirely the whole oil market. I think for the moment, there's enough room, the market is giving the government enough room to basically decide what it wants to do. We had hoped to see more results by now in terms of who around Buhari will be running the country, but hopefully in a month or so, that question would have been resolved, and then we can then have a sense of where they're going. But for now, I wouldn't be so eager to start trying to create risk mitigation structures, from the oil side of the equation, particularly seeing that the central bank seems to have things reasonably under control at the moment.
Well, it seems as if the regulator has things under control, but we still have our foreign reserves depleting. As of the 12th, it was down about $29 billion, and so it's raised a lot of concern, and everybody is wondering where exactly are we heading.
From what we hear, it's kind of remained in that $29 billion threshold for quite a while. We believe that the actual demand for FX is not being met materially. So that means there are actually structure to curtail the demand. So the question is, where is the supply going to come from? In the near term, there's no visibility on that. If they more or less open the doors, then you see that depletion probably go down a bit fast. But for the moment, the challenge will be for the central bank to determine, are we going to do a devaluation or not? They clearly can't do a devaluation until the new government settles down. And then the government then will have to it's on economic policy, and it's on the framework of that policy that the CBN can then come back and say, perhaps we should tinker with the exchange rate scenario between Naira and dollar.
So in looking at the challenges that the World Bank is expecting that Nigeria should be facing, I already mentioned it at the beginning of this conversation in terms of challenging times ahead because of low oil prices, and of course the Central Bank of Nigeria having to maintain its stance until it waits for a definite policy, economic policy direction from the new administration. What should be happening right now? Everybody just seems to be in a sit-tight mode.
Yes, I think, and if you're going to do anything, you want to do very short-term, quick transactions. You don't want to take long-term positions because you don't have a clear line of sight as to what will happen. So that's what you see in the market effect, really, both in the fixed income space as well as in the equities. Quick profit taking when there's any upside, and then it comes back down again. So I think for the moment, the advice to most investors is, be patient. Give it another couple of weeks, at most a month, and we'll then have a sufficient signal from the government as to which direction they want to go.
Okay, so in the waiting to sit down and wait to see what directions the market is going to tell me the new economic policy is going to take, we're going to just see monies floating around, the CBN doing its mop-up once in a while, the DMO holding auctions, and it just seems as if we just have money just everywhere and nowhere.
Well, it means essentially that you have quick profit-taking opportunities, quick, smart investors to take advantage of that. But if there's something that looks like a long-term profitable opportunity, they may still decide to ignore it because they don't want to take that long-term view yet.
But what would you advise? Would you advise at this time that investors should, wait for the long term or just take profit as they see it?
Our advice, it's to be patient, to be very cautious in the market. If there are quick wins, yes, by all means, your traders can take advantage of it. But otherwise, Nigeria is a long-term play fundamentally, and there's a period of 2 to 4 weeks is nothing in the lifespan of a 5-year investment or a 10-year investment. So just be patient and wait it out.
Okay, IQ. We hear you loud and clear on that one. But your company, AfriInvest, is one of the most capitalized and active market operator. Now, the NSE holds its 54th annual general meeting on Thursday. That's tomorrow. We'd like to get your thoughts on the exchange and market activities in 2014. So you just hold on to your thoughts and we'll come back and continue this conversation. As I said, the conversation with Ike Chioke, Managing Director, AfriInvest, continues in just a moment. And when we do come back, we turn our attention to other matters happening at the market, specifically the Nigerian Stock Exchange. Please join me again.